that burning in your gut after a trade goes wrong, that hollow feeling in your chest when the market turns against you with a violence you did not anticipate. That is not failure. You must understand this. That is the market sending you a bill. It is an invoice for a lesson you desperately needed to learn. The question is, will you pay it and learn, or will you tear it up in a fit of rage and wait for the next more expensive bill to arrive? Because it will arrive. The market is the most expensive university on earth, and it has no scholarships. The only currency it accepts is your own hard-earned capital. You are biologically programmed to resist this education. Your pride, your ego, the very voice in your head that tells you that you are intelligent, rebels against the idea of paying to be proven wrong. A man would rather lose his money than his pride. He will hold a losing stock, letting a small, manageable loss fester into a catastrophic one, all because admitting the mistake feels like a personal defeat. He cannot bring himself to sell because to sell is to say, I was wrong. And the human mind, especially the mind of a man who believes he is clever, despises that admission. He will invent 100 reasons why his initial judgment was correct, why the market is temporarily insane, why it will surely come back. Hope becomes his strategy. And hope, in Wall Street, is the greatest liability of all. It is the anesthetic that dulls the pain of a mortal wound, allowing you to bleed out financially while dreaming of a miraculous recovery. You must kill hope before it kills your account. You must learn to pay for your mistakes, and to do so cheerfully, knowing that the price of the lesson is a bargain compared to the cost of ignorance. I learned this when I first came to New York. I thought I was a master of the game. In the bucket shops, I was the boy Plunger. I could read the tape as a musician reads a score. The fluctuations were my symphony. I had a feel for the market's rhythm, its hesitations, its bursts of energy. I made my first $10,000 before I was 20 years old. I felt invincible. I believed I had conquered the game. So, with my pockets full and my head full of pride, I walked into a real brokerage house, A.R. Fullerton & Co., ready to show the great titans of Wall Street how it was done. And I proceeded to lose every dollar I had. The shock was profound. It felt like a betrayal. The market, my market, had turned on me. But the market had not changed. I had. Or rather, the conditions under which I operated had changed. In the bucket shops, the quotes came directly from the ticker. I was trading on the present moment. In a legitimate New York Stock Exchange house, there was a delay. The numbers I saw on the board were a history of what had already happened. I was trading in the past, a ghost chasing shadows. My system, so perfect for one set of conditions, was utterly useless in another. I was like a sea captain who knew how to navigate a calm sea but found himself in a hurricane with the same old charts. I kept making the same plays that had made me rich, and they kept failing. A stock would look strong on the board, so I would buy it, only to find that the real move had already happened and I was buying at the very top from those who had the true, real-time information. I was feeding my capital directly into the pockets of shrewder men. I lost my entire stake, then I lost a second stake I had to borrow. The experience was crushing. It did more than empty my bank account. It shattered my confidence. Who was I, if not the boy Plunger, the master of the tape? It was in that moment of financial ruin that I paid my tuition. I did not blame the market. I did not curse my bad luck. I sat down and I thought. The market had not been unfair. It had simply been the market. The fault was mine. I had failed to recognize that the game was different. The lesson cost me everything I had, but it was the most valuable lesson of my life. It taught me that a speculator must be a student of conditions. He cannot have a rigid system and expect the market to bend to it. He must have principles, yes, but his tactics must be flexible. That one painful lesson was the foundation upon which I later built fortunes. I paid the price, and I received an education worth millions. If you want to understand the true psychology of speculation, you must read the one book that defines the game. I am talking about Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below. Many men I knew back then, and many I see today, they pay the tuition, but they never learn the lesson. They lose their money, and all they are left with is bitterness. They say the game is rigged. They blame the insiders, the specialists, the big money. They blame everyone but the one person responsible, the man in the mirror. To lose money is one thing. To lose it and not know why is a tragedy that repeats itself until the last dollar is gone. Let us apply this to your trading today. The conditions are different. The technology is faster, but the human element is identical. You have a screen now, not a ticker tape. Information flies at you at the speed of light. You might learn a strategy online, perhaps one about buying technology stocks that break out to new highs. For a few months, the market is in a powerful bull run. The S&P 500 is climbing day after day. Your strategy works flawlessly. Every stock you buy seems to fly higher. You double your account. You feel that same thing I felt as a young man. Invincibility. You're not trading. You're a genius. Then the character of the market changes. The Federal Reserve hints at raising interest rates. Fear enters the picture. The broad market indices, instead of climbing, begin to move sideways in a wide, choppy range. Your breakout strategy suddenly stops working. You buy a stock as it makes a new high, and within an hour it reverses and closes at the low of the day. You are stopped out for a loss. You try again. The same thing happens. And again. Your profits from the bull market begin to erode. You grow frustrated, angry. You think, it worked before, it must work again. The strategy is sound. You are wrong. The strategy was sound for a specific set of market conditions. Now the conditions have changed. The market is sending you a bill. Each of those losing trades is a tuition payment. The lesson is, breakout strategies are less effective in a choppy, range-bound market. You have two choices. You can accept the lesson, pay the tuition, and adapt. Perhaps you stop trading breakouts and start studying how to trade ranges. Perhaps you simply stand aside, recognizing that the current environment is not suited to your particular method. You preserve your capital, waiting for the wind to shift back in your favor. Or you can refuse to learn. You can insist that your method is correct and the market is wrong. You can double down, convinced that the next breakout will be the real one. This is called fighting the tape. It is the speculator's cardinal sin. The market will continue to send you bills, each one larger than the last, until your account is empty. You will have paid the highest possible price for an education you refuse to receive. The only way to ensure you learn is to become your own harshest critic. After every loss, especially a large one, you must perform a post-mortem. You must sit down, away from the hypnotizing glow of the screen, and analyze what you did wrong. Not what the market did wrong. What you did wrong. Did you enter too late? Did you use too much size? Did you ignore a general market warning sign? Did you violate one of your own rules out of impatience or greed? You must write it down. Keep a ledger, not of your profits and losses, but of your mistakes and the lessons they taught you. A loss is only a loss on your balance sheet. When you properly dissect it, it becomes an asset in your brain. It becomes a piece of market wisdom that you have purchased. When you see a similar setup in the future, a warning bell will go off in your mind. You will remember the pain of the previous loss. You will say, I have paid for this knowledge once. I will not pay for it again. That is how you graduate from the University of Wall Street. You stop paying for the same classes over and over. The public is always looking for a shortcut. They want a tip. They want a secret formula. They want to be given the fish, but they never want to learn how to fish. They don't understand that the real work of speculation is not in the buying and selling. It is in the waiting, the studying, and the ruthless self-analysis. It is in paying for your errors and making damn sure you get your money's worth in wisdom. There is nothing disgraceful about being wrong and losing money. I have been wrong countless times. I have gone from millionaire to broke on more than one occasion. But I never made the same mistake twice. I made sure each financial catastrophe taught me something new and vital about the market, or more importantly, about myself. The tuition for my education was astronomical, but the lessons were permanent. I learned not to be impatient. I learned not to fight the tape. I learned to listen to the market and not to the hopeful voices in my own head. I learned to take a small loss quickly before it became a financial calamity. Each of these lessons was paid for with a stack of my own money. So the next time you take a loss, I want you to change your thinking. Do not see it as a failure. Do not wallow in regret or anger. See it for what it is, a receipt. You have just purchased a piece of invaluable market knowledge. Your job now is to study that receipt, understand the lesson it represents, and commit it to memory so that you never have to buy that particular lesson again. The market is always open for class. The question is, are you ready to be a student, or will you remain just another sucker paying for an education he refuses to accept? The choice is entirely yours.